Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Archer Aviation Inc. quarterly report. Archer Aviation Inc. is a leading innovator in the field of electric aviation technology. The company's primary focus is on designing and developing cutting-edge aircraft and related services for both commercial and defense sectors worldwide. At the heart of Archer's offerings are its eVTOL, electric vertical takeoff and landing, aircraft, specifically designed for urban air taxi operations. This revolutionary technology has the potential to transform the way people travel in cities, providing a fast, efficient, and environmentally friendly mode of transportation. In addition to its aircraft development, Archer Aviation Inc. also provides related technologies and services that support its eVTOL aircraft. These may include training programs, maintenance services, and other support systems necessary for safe and effective operation. With its headquarters based in San Jose, California, Archer Aviation Inc. is well-positioned to capitalize on the growing demand for sustainable aviation solutions. By pushing the boundaries of electric flight technology, the company is poised to make a significant impact on the future of transportation. Archer Aviation Inc. maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Archer Aviation Inc. trades at a lower price-to-book ratio of 2.06 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 11% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company's financial performance are multifaceted. On the growth side, several factors contribute to an increase in revenue. One key driver is the expansion into new markets, which can lead to increased sales and revenue. Additionally, the development and sale of innovative products such as electric vertical takeoff and landing aircraft can also drive revenue growth. The company's partnership with Anduril for defense applications has also been a significant contributor to revenue growth. This collaboration enables the sale of next-generation aircraft and related technologies, further boosting revenue. Furthermore, lease-related revenue has increased significantly, with the company generating $1 million in 2026 compared to $0 in 2025. On the other hand, there are several drivers that contribute to a decline in revenue. One major factor is the higher cost of revenue due to increased material costs. This can lead to reduced profit margins and decreased revenue. Additionally, increased operating expenses due to higher research and development spending can also negatively impact revenue. These factors highlight the importance of managing costs and optimizing operations to maintain revenue growth. The company's debt level has shown a slight decrease over the period under review. According to the financial reports, the total carrying amount of debt decreased from $80.3 million to $78.8 million. However, the total debt payable remained unchanged at $81 million. This indicates that while the overall debt burden may have decreased slightly, the company still has a significant amount of debt outstanding. In terms of interest expenses, there was an increase from $1.1 million to $1.2 million. This suggests that the company is paying more in interest on its debts over time. The rise in interest expenses could be due to various factors, such as changes in market rates or the company's increasing debt burden. Management is projecting a cautious outlook for the company's short-term performance. Despite having sufficient cash to fund operations for at least 12 months, they expect additional losses and higher operating expenses in the foreseeable future. However, their long-term strategy is ambitious, with plans to develop eVTOL aircraft for air taxi operations in major cities, expand into international markets, and advance the development of hybrid electric, autonomous VTOL aircraft platforms. The company is also focusing on commercialization in key areas such as cargo and rescue operations. To achieve these goals, management will rely on financing through existing cash, pre-delivery payments, equity issuances, and debt financings until significant revenue is generated. The company's investment strategy is centered around preserving principal and maintaining liquidity, rather than seeking trading or speculative gains. Overall, while the short-term outlook may be challenging, management's long-term vision for the company is one of growth and expansion into new markets and applications. The company has made several strategic acquisitions and divestitures in recent years. In terms of acquisitions, the company purchased Hawthorne Airport on December 8, 2025, marking a significant milestone in its expansion plans. Additionally, it acquired an FBO business operating at Hawthorne Airport on April 1, 2026, further solidifying its presence in the region. The company also made a business combination acquisition, which granted 20,009,224 RSUs to founders under the 2019 plan, and vested 10,004,612 shares of Class B common stock immediately prior to closing. Furthermore, it acquired in 75% ownership interest in a fixed-base operator business at Hawthorne Airport for $25 million on April 1, 2026. In terms of control, the company gained control of Hawthorne Airport, which is strategically located near Los Angeles International Airport and downtown Los Angeles. This acquisition provides the company with significant opportunities for growth and expansion in the region. On the other hand, the company has also made some divestitures. In April 2022, it canceled 5,002,306 shares of Class B common stock, while in July 2023, it forfeited 15,006,918 shares of Class B common stock. These divestitures suggest that the company is actively managing its share capital and making strategic decisions to optimize its ownership structure. The company has been involved in various activities related to its share capital. One notable activity is the purchase of shares through a buyback program. This move suggests that the company is looking to reduce its outstanding share count and potentially boost shareholder value. In addition to buying back shares, the company has also issued new shares as part of its warrant programs. Specifically, 1,669,783 Stellantis warrants were issued on April 27, 2026. This indicates that the company is providing additional equity to certain stakeholders, likely in exchange for other forms of consideration. The issuance of warrants and subsequent exercise of some of these warrants also highlights the dynamic nature of the company's share capital structure. For instance, during the 3 months ended March 31, 2026, 52 public warrants were exercised, resulting in the issuance of new shares. That concludes the financial summary for Archer Aviation Inc. Feel free to comment below, and I will be happy to answer them when possible.